just dropped at the intersection of crypto and traditional finance. We're looking at a brand new ETF proposal that's making some serious waves, and believe me, it's not just in the financial world. This story pulls together politics, media, and the future of digital money in a way that's much bigger than you might think. So get this, a really surprising new player just stepped into the crypto ETF arena. A media company with ties to Donald Trump has filed paperwork for not one, but two crypto ETFs. This isn't just another financial product filing. Nope. It's this wild mix of politics, media, and crypto that tells us a whole lot about where this industry might be headed.
Okay, so let's break this down. What exactly has been proposed here? Who's the team behind it, and what are they trying to get off the ground?
The company doing the filing is Truth Social Funds, which is connected to Trump Media, and they've teamed up with a massive name in the industry, Crypto.com. Crypto.com is going to handle all the critical back-end stuff, like custody, which just means safely holding the crypto, and making sure there's enough liquidity so it's easy to buy and sell. Now, they've proposed two things. First, an ETF that holds both Bitcoin and Ethereum, and second, a Cronos Yield Maximizer ETF. That second one is especially interesting because it's designed to include staking rewards, which is kind of like earning interest on your crypto. And that's a feature that has made regulators, well, let's just say, very nervous in the past. But before we get any deeper into what makes this filing so unique, we kind of need to take a step back. Why are people so excited about crypto ETFs, or exchange-traded funds, in the first place? I mean, what problem are they even trying to solve? You know, if you've ever tried to buy crypto directly, you know it can feel like a bit of a maze. You've got to set up an account on an exchange, figure out how to fund it, buy the crypto, and then everyone tells you for security you have to move it to a private wallet. And that means you, and you alone, are in charge of these super complex private keys. It's a lot of responsibility, and honestly, it can be pretty intimidating. And that's the core difference right there. With direct custody, you are your own bank. That comes with all the benefits, but also all the stress of managing your own security. An ETF, on the other hand, totally different ballgame. It's a regulated product that you can buy and sell on a regular stock exchange just like a share of Apple. You get the price exposure to crypto without ever having to think about wallets or private keys. So, here's the bottom line. ETFs just smash through a huge barrier to entry. For big institutions, pension funds, or even just your average person with a retirement account, buying a regulated product through a brokerage is simple. It's familiar. It's comfortable. This doesn't just open a door, it potentially blows the whole wall down for a whole new class of investors. Okay, so now that we're all on the same page about why these crypto ETFs are such a big deal, let's circle back to this specific filing. What makes the one from Truth Social Funds and Crypto.com stand out from the crowd? Well, it really comes down to three key things that make this proposal different from what we've seen before. First off, it bundles both Bitcoin and Ethereum into one single easy-to-buy product. Second, and this is a huge one, is the inclusion of those staking rewards in the Cronos ETF. This means the fund would actually generate income for investors. Regulators have been really hesitant to approve anything like that. And third, having Crypto.com as a partner provides some serious established infrastructure for custody and asset backing right from day one. Now, this all sounds really promising, right? But every single crypto product, no matter who's behind it, has to face its biggest challenge, running the gauntlet of regulatory approval. And that means navigating the SEC. And that's a really big F. No matter how exciting it sounds, a filing is just that. It's a proposal. It is absolutely not a guarantee that it will ever get approved. This is the multi-billion-dollar question, isn't it? The SEC has a long history of being extremely cautious with crypto products, and this one has features, like staking, that are probably going to attract even more scrutiny than usual. You can bet the SEC is going to be looking at this with a magnifying glass. They're going to have a few major concerns. They'll worry about the potential for market manipulation, they'll closely examine Crypto.com's custody safeguards, and they're going to have to grapple with how staking rewards even fit into U.S. securities law. But at the end of the day, it all boils down to their main job, protecting investors.
Okay, so with all this uncertainty, why are we even talking about this right now, before any decision has been made? Let's dig into the immediate impact on the market and what you should really take away from all this.
Here's the most important thing to remember about markets. They don't wait for the final whistle. They move on narratives, on expectations, on what could happen. The simple fact that a high-profile company like this is filing for these kinds of products is enough to change the conversation and get big institutional players interested.
So, who actually stands to benefit here? Well, on one side, you've got everyday investors who want a simple, regulated way to get into crypto, plus all the financial players like custodians and brokers. But, and there's always a but, the risks are just as real. A flat no from regulators could kill the whole thing. There's always the risk that something goes wrong in the execution, and sometimes the final terms of the ETF might mean you'd have been better off just buying the crypto yourself. It's definitely not a guaranteed win, but the possibility is already changing the game.
And that really brings us to the final big picture question. This filing is sitting right at the crossroads of regulation, innovation, and massive public interest. So, is this another crucial step that helps crypto finally become a mainstream accessible asset for everyone? Or is it just another headline, another flash in the pan in a long series of attempts? Well, that's what we'll all be watching.